Good morning. Welcome back to Venture Daily. On today's show, Nvidia just became the most valuable company in history, hitting $4 trillion in market cap, and Trump unveils the latest tariff rates on countries. I'm Jackson Fordyce. It's Thursday, July 10th. Let's get you smarter before your first meeting. Nvidia just became the most valuable company in the world ever. On Wednesday, the AI chip giant just crossed $4 trillion in market cap, a first in public market history, and shares rose around 2% yesterday, pushing Nvidia past Microsoft, past Apple. And this caps off a staggering run for the company that builds the hardware backbone of the AI boom. Nvidia's GPUs power everything from ChatGPT to enterprise LLMs, and investors continue to bet big that AI is just getting started. So here's the timeline of Nvidia. So $2 trillion in market cap in February of 2024 last year, $3 trillion in market cap this year, just last month, and then within 1 month, $4 trillion in market cap. So even with, though, the export bans to China and escalating geopolitical risk, the company keeps climbing. In May, Nvidia warned it could lose $8 billion in sales from restrictions on its H2O chips to China. And ironically, one of Nvidia's biggest customers is also now its biggest rival, Microsoft, now dethroned by the very chip maker that it relies on. It's a huge day for Nvidia, so I wanted to talk to our friend Sunil Dhaliwal.
Great to be here, Jackson. I'm Sunil Dhaliwal. I'm a general partner at Amplify Partners. We're a $2.5 billion assets under management venture fund. We focus on technical founders at the earliest stages in a range of industries, generally in infrastructure technology, AI, life sciences, and software.
So I asked Sunil with my first question, Nvidia just became the most valuable company in history. Are we looking at the new foundation of the AI economy, or is this just peak euphoria for hardware?
I don't think it's the peak, but I also think that there's downside here too, right? And the AI economy is emerging. NVIDIA's continues to be the single strongest single name to play that for investors. And so it's not surprising that as goes the barometer on AI, goes the fortunes of NVIDIA. And if you believe it's the peak, I think what you'd be saying is you believe this is the peak moment for either AI growth or the AI hype cycle. I don't believe that to be true, but there is some downside to that. That is, semiconductors are still a cyclical industry, so it's hard to say that this is now the new bedrock upon which everything will be built from a valuation perspective.
And speaking of downsides, like Sunil just mentioned, we just spoke earlier about the Chinese chip curbs that President Trump put in place for specifically kind of Nvidia. And so I wanted to ask Sunil this question specifically. With $8 billion lost in sales from China chip curbs, how is Nvidia continuing to outperform? And does that mean geopolitical risk is overrated when it comes to AI infrastructure?
I don't think it's overrated. What I would say is, China has just such an outsized influence given the size of their economy and the size of their national investment in AI. But I think what you also have to understand is, unlike previous technology trends, AI is a geopolitically aligned one, meaning every sovereign wants to have AI that they can control. And I think there's a great fear that people don't want to be caught in a bipolar world where you're either in the US under the thumb of a US AI regime or in China under an AI regime in China only. So this is why I think you've got a strong geopolitical or sovereign pull from so many other countries who are very focused on standing up independent infrastructure. Now you size that opportunity against the risk of a China loss for NVIDIA, and I'd say it's still net positive for them, the idea of a global market outside of the US. But boy, I'm sure they wish they had that China opportunity, all else being equal.
We spoke about this a couple of weeks ago on Venture Daily with OpenAI for countries, kind of pointing the finger at China, saying, hey, y'all are influencing these African nations, these third world Asian nations when it comes to AI infrastructure. And Sunil kind of put it this way, that it makes sense that a sovereign country would want their own version of their AI infrastructure. And I wanted to transition the conversation away from geopolitical risk to talking about the semiconductor bubble, and maybe if there is one at all. So I asked Sunil, NVIDIA's market cap has now doubled in just 4 months. Does this signal a true AI supercycle? Are we heading into a dangerous bubble territory with too much riding on just one company, that being Nvidia?
I think it's dangerous bubble territory when people start paying too much forward credit for what's possible. And I think this is the risk I alluded to earlier, is people need to remember that semiconductors as an industry, and at its core, NVIDIA is a semiconductor company, this is capital spending, and capital spending does go in cycles. It is possible, and it is likely that at some point cycles reverse and you have a period of consolidation and people digesting all of this spend and figuring out how to be more efficient with their infrastructure investments they've already made rather than pursuing the latest and greatest. But I think where a market gets frothy and dangerous is when people are going to assign forward credit like this growth is never going to end. But at the same time, we're kind of walking up this very steep hill on the other side, which may be a little bit of a cliff, when all of a sudden capital spending contracts or people are looking for clearer ROI on their spend. And it's not just a, FOMO oriented investment that, um, can turn off pretty quickly. And if you're looking for historical precedents, a lot of people remember Y2K as this moment of time for tech, but what a lot of people forget is right at the same time as Y2K was the implosion of the telecom industry. And the telecom industry had a really similar boom curve where everyone was talking about laying the pipes that would be the foundation of the internet, and there was fiber being laid around the world, and that was driving more and more optical networking equipment. Those valuations were sky high. The growth prospects were really good right up until the moment people realized we don't need to make any more of that specific type of investment. Those value chains collapsed really quickly.
And to close it out today, I wanted to talk about one of NVIDIA's biggest customers and also now one of their biggest competitors. With my last question, I asked him if Microsoft is both NVIDIA's customer and competitor in AI, how sustainable is NVIDIA's dominance as hyperscalers start building more in-house chips?
Building in-house chips is hard. I mean, I think it's easier for people to go the other way, and I think the hyperscalers probably have more fear of a massive company with reach and balance sheet like Nvidia coming down and delivering their own GPU, cloud offerings, as we've started to see, than the idea of hyperscalers now all of a sudden getting into chip design and chip manufacturing and having their own software layer. It's incredibly complex. NVIDIA's been at this for 20 plus years. So um, I wouldn't I wouldn't be sitting here if I'm NVIDIA worried about what Microsoft will do. I think they've got far more to gain by partnering with those people as the outlets to customers than they have to fear of enabling them as competitors. But it's pretty clear that anybody in the hyperscaler category does not want to sit around being solely at NVIDIA's beck and call as the supplier of the only supplier in town. So it still wouldn't surprise me if other people are not going to follow the the Google playbook or even the Amazon playbook and starting to develop more in-house processors to make sure they've got a second source.
Thank you, Sunil, for being on the show today. All right, next story today. President Trump just dropped a fresh batch of tariff demand letters with new levies set to hit August 1st in just a couple of weeks. This is the latest round of what the tariffs will look like. So I made this graphic. 30% tariffs on Algeria, Libya, and Iraq. 25% tariffs on Brunei, Moldova, and then 20% tariffs, which is up from 17% on the Philippines. So Trump initially announced these tariffs back in April and then gave 90 days to countries to negotiate, right? But then the deadline was supposed to be Wednesday, but in a surprise twist, he extended that date to August 1st while insisting, what do you say, no extensions will be granted. And he also raised pressure on two major players, one being the European Union, which could face unilateral tariffs despite progress in talks, and India, which Trump says will get an extra 10% levy for its participation in BRICS, the economic bloc he claims threatens the US dollar, which is Brazil, Russia, India, China, and South Africa. And then there's copper. Trump floated a 50% tariff on copper products, triggering a record 17% spike in prices on Tuesday. And he's also threatening a 200% tariff on pharma imports unless drug makers move manufacturing to the United States within a year. So August 1 is shaping up to be a big day, a contentious day. And so for more on this story, I spoke with our friend Stan Greger.
Stan Greger. I'm the CEO of Summit Financial. We are here to help our clients and our advisors through the wealth management process.
For my first question to Stan, I asked him, Trump's threatening 30% plus tariffs and floating 200% on pharma imports. Are we entering a new era of weaponized trade or just watching a high-stakes negotiation theater show?
What do you think? You have the man that wrote Art of the Deal, right? So the tariffs are a weapon to get back to some kind of normalcy, some kind of fairness. And so far, when you look at what's been rolled out versus what's been threatened to be rolled out, it's pretty consistent with the art of the deal. He's had a lot of these countries acquiesce and make a more fair response. So if you're asking me my gut, it's a lot of this is negotiations and tactics to get everybody back to the table and get some fairness in there.
Earlier, I mentioned copper and the 50% tariff that Trump is floating around that commodity. So I wanted to ask Stan specifically, with copper prices spiking and global partners scrambling, how much of this tariff blitz is about trade and how much is about signaling dominance?
Oh, it's control, right? Those are commodities that, you look at where does copper go and how many touch points are within copper. It's pretty extreme, right? From semis to housing. I mean, you go on and on and on. So putting that in place, obviously, if things don't change, every country realizes the impact of, wow, if copper goes up, this affects us in so many different business lines and forms of expenses. So, yeah, I'm watching the game. It's kind of tactically being designed to hit the components that will make the biggest impact and hit the wallet the deepest and hardest. So it's interesting. It's interesting to watch.
I also asked Stan, if the BRICS bloc is Trump's new target, what does that mean for U.S. companies reliant on India and other emerging markets and for the future of the dollar's global role?
Well, look, you're starting to see the dollar having, one of its most challenging years in 53 years, right? So that's an obvious piece from a currency standpoint. But all of those countries, they rely on the biggest trading partner in the world, which is the U.S. Right? So, is it a strong arm approach? Possibly, but they do need to come to some kind of resolution. Otherwise, if the U.S. shuts down on purchasing from those countries, there's a pretty drastic effect. And look at what happened to China when we had this little snafu take place between the two countries. I mean, factories being shut down, business being shut down, productivity, the shipping space. It has a profound effect. So let's see where this goes.
For my final question for Stan, I asked him, after months of mixed messages, deadline extensions, and partial deals, do global markets still take Trump's tariff threats seriously? Or are we nearing tariff fatigue?
Well, are the markets up or down? Is my question. We're at an all-time high. So I think, look, markets always predict where things are going. And I think the longer-term view is still positive. I think I call it the theatrical events of today or next week or next month are going to continue on both sides, right? On our side and the foreign countries that he's working with. But where we land 3 years, 5 years, 10 years from now, I think the markets are saying we're not worried. We think we're going to be in a good spot. And in fact, due to the rise of most of the markets, I think they're saying we're going to be in a much better spot. So I agree with that.
Thank you to Stan for being on the show today. All right, that is all for our time today here at Venture Daily. Thank you so much for spending some time with me today. Thank you to Content Stack for allowing us to film here every single morning in Austin, Texas at the Content Stack Experience Center. If you like today's show, whether on YouTube, Spotify, Apple Podcast, or X, leave us a like, a comment, and a review. Throw us a 5-star rating if you think we earned it. And as always, I'll see you here tomorrow morning at Venture Daily.